Back in the studio, Tony Bruce, CPA, more than just an accountant. I saw a post and report today regarding the Freedom Caucus. And already, as we approach the inauguration and change of administration and the like, we're starting to see what's happening in the world of taxes and budgets and how that's going to look going forward. We said earlier that most of our small business owners and big business owners, from what I've seen too, meaning, the CEOs, the big corporate titans, they're all saying that we're going to enter into a period of stability where, stability in the sense that we kind of know where regulation is going to be, where tax is going to be. If anything, it's going to slide to the favorable side, if not just stay the same. So having said all that, I was a little bit surprised about this report where they're concerned about SALT. As you may know, SALT stands for state and local tax. So back in the day, during the Trump tax law changes, what happened was there was a cap put on SALT, meaning state and local taxes, $10,000 to be specific. And in order to compensate for that, what they did was they doubled the standard deductions. Now, what does all this mean? Well, the federal government thought in the administration of the first Trump administration thought that it would incentivize state and local governments to kind of keep their budgets in check. And the local constituents in New Jersey, for example, New York, Connecticut, Massachusetts, pick your poison, California, Hawaii, and whatever states are considered high tax, even jurisdictions like local ones like Philadelphia or New York City or LA, it would incentivize those local governments to keep their taxes down, since we as residents were not able to deduct all those taxes on our federal return as an itemized deduction. So here we are. We're back to the SALT again. Ironically, I was having a conversation with a colleague the other morning, and he mentioned the same thing. Oh, we're going to increase the SALT, right? And I said to him, listen, I said, do we really want that to happen? So I don't know. We'll see. But here's the thing. This is what the Freedom Caucus, from what I understand, is asking for. They're saying, well, if we increase corporate taxes, then it'll help pay for the loss of revenue by having a greater SALT deduction on individual returns. I'm not so sure that I like that idea. Generally, when you're increasing taxes, whether they're at the corporate level or the business level, many oftentimes it'll come down to the fact that it'll impact small businesses. The larger companies will just pass that tax increase on to the consumer or to the employees in their business in the form of increases in prices for their products and services, or in terms of the employees, maybe not being so generous with wage increases, bonuses, retirement strategies, and the like. So we'll see what happens, but we're entering into that period now. Ironically, we're about 10 days out or so where you can actually start filing 1040 returns. The IRS is saying January 27th is the target date. So again, we're sitting here and wondering and paying attention now to what's going to happen on the tax front with budgets, negotiations, and the like as the new administration comes in with a full backup of the Congress and the like. So again, I'm not too keen on increasing the SALT deduction. I'd like to hear your comments about it. I get it. I get that you want to see a larger state and local tax deduction. But in effect, by doubling the standard deduction, we've encompassed a lot of that, because in the old days, then we had something called the AMT. And at the end of the day, by lowering the brackets like we did in terms of a percentage or 2 points, and in fact doubling the standard deduction, as well as giving AMT relief, alternative minimum tax relief, if you're familiar with that, we effectively have ourselves a simpler tax code, which I'm all in favor of, right? There's enough that we could do as professionals to help advise and give planning opportunities to our small business clients. But for the individual space, a simplified return where you have your W-2 income, interest, dividends, and the like, I think it makes it a better system for everybody. In fact, ends up saving money in the long run, and so on and so forth. So let us know your thoughts. That's where I am on that. The Freedom Caucus, ironically, I would think that that's a more conservative caucus. And the trade-off being, again, will give us higher SALT deductions on the itemized return front or deduction front in lieu of increasing the corporate taxes. I'm not a big fan of increasing business taxes of any type. I'm not a big fan of having that. It generally gets passed on somehow, some way. Those companies won't absorb those taxes. They'll give them out to us in the form of increases. So I hope that makes sense. Let me know what you think, good or bad, differences, indifferences. I'd love to hear that and see where we go from here, because we're going to be getting into that season where Taxes are coming up, filings coming up, and budgets and all the like are going to happen. So great to see you. Try to stay warm. Where we are, it's a little bit chilly. I hope you're down in some place or somewhere where you can play golf or be in a warmer climate. Tony Bruce, CPA, more than just an accountant.